I know we talked about this schedule a little bit. I felt like I was talking about it more to them over there than I did with you guys. Did we cover this enough? Schedule 1. Does it sound familiar? Because I went on the videos. I've uploaded all the ones from the other day, and we did go past it. But I wanted to be sure everybody kind of understood what this was specifically, or the W-4, or any questions you might have from the other day. Specifically, yes.
This one was where on the bottom is all where your subtraction.
Yes. That's the one thing I remember telling you guys. I'm like, I remember harping on the, when it's the indentation. Yes.
To the top?
Yes.
Okay.
And this used to not even exist till last year. I don't know if they're going to have this same form, the Schedule 1. If they do, it'll be pretty similar. If they do away with it, there'll be something else we'll get to learn at the last minute. But Schedule 1, honey, can you see from over there?
Yeah.
Okay. But yeah, Schedule 1, that right part's income, different incomes that are used on this little section, kind of miscellaneous type things, oddball things that you don't see every day, and then that's different adjustments and things like that. And we will learn more about some of these things as we go. And if there's any questions when we get to that competency exam, and as we're doing practice and things like that, when we start doing that, I'll kind of touch on some of the other things if they're not going to cover it, if it's specific to this office. Because I think that's more what they were going for this year. You know, the big part of the training is going to be stuff everybody sees, and if there's things you need to fill in, you know, to just complete a lot of your returns, then go in and fill that in. So that is the Schedule 1. And then I know I kind of just went over how you're self-employed. Self-employment is considered a business. An activity qualifies as a business if your primary purpose is to make income and profit. Okay, you're involved in it continuously and regularly. Presumed to be profit for 3 of the last 5 years. Okay, you may not have this sheet in there. Some of this you can just jot down if you'd like. So what I will say about this is there is the rule of 3 to 5 years the IRS wants you to carry on a profit. Okay, any of this stuff is kind of the end of that last set of sheets. So if you want to take notes on that or take them on the front part of yours that I laid out today, that's fine too. We won't have too much we'll go over, then we'll just look at the Schedule C itself. But yeah, they want it to be your main business, okay? Presumed to be profit, 3 out of 5 years. Activity that's not carried on for profit at that point could be considered a hobby. And I wish they would put could be, because is there something that's going to happen when you reach that 6-year mark? No. Okay? So what most likely would happen is eventually the IRS might flag it and send you a letter or something and say, hey, we've noticed the last, 3 out of 5 years you haven't been profitable. Usually it's past that 5-year mark when they would probably send it out. Let's say 7 or 8 years. Hey, we noticed the last 7 years you haven't hit the mark on this rule. We want you to turn over receipts and proof and what have you. Why are you not profitable? Right? Because most people that are in business eventually want to be profitable. They don't want to show what's called a loss on their self-employment form. So that's kind of the hard, fast rule they go by. But there is caveats. So I've not had anybody yet that's brought things in that's been in that situation. So we've only been in this office 3 years. So I wouldn't in this office that we're directly our clients. And then the other office we've been over about 7 or 8 years. I can't think of anybody I've had that long that even this applies to. So that's why it would take us a while to probably even see it. But yeah, they would probably get a letter on that. I don't think it would be an automatic rejection because I've had losses and I've never gotten a reject on that. So it's going to be something they would random audit or the system would flag it on their side and they'd send you a letter. So, and if that were to happen, we'd go from there. Most of our letters are pretty self-explanatory, and you'll learn more about how we handle those when we do our corporate part of the training. Self-employment considered a business. We kind of talked about this on the other page. They look at, and we would look at, if someone comes in, the manner in which they carry it, the expertise, time and effort. This is all kind of common sense. I mean, we're going to look at what are you doing? Does it make sense? Does it pass the smell test? Is it really just for pleasure? Are you just wanting a discount on your Mary Kay? If you only sold $1,000 last year, but you had losses of $10,000, I don't think you're really working it like a business, right? That's what they're trying to get at. So we want to make sure, we inform our clients of the legal and technical reasons and things when they do this, eventually how that would look on a small business. Hobby's not considered a business because activity is not carried to generate a profit. If someone did eventually have an actual hobby, it's going to go on line 21 of that Schedule 1 I just showed you guys. Okay, so if there's an other income section, that would be hobby income. Not really ever had anybody that's gotten to that point, like I said, but should they want to deduct something or have that on there, it would go there. All right, W-2 and 1099 differences. These are pretty self-explanatory. If you guys will remember back to going over W-2s the other day, okay? That's used by an employer. You get your wages reported on it, other paid compensation on it, and you can withhold taxes on it, right? 1099, miscellaneous, which is going to be the form you use for self-employment, if you have one issued, that is. It can report non-employee compensation. That's what we call that. That's what it's titled, non-employee compensation. You can have rents, royalties, and other income. Okay? Does anybody remember which box it has to be in? Did we get that far? We may have not gotten that far yet. So I'm not going to quiz you yet.
Box 7?
Box 7, yes. Box 7. 99.9% of the time, that's the box you're going to need to use, is box 7. If it's not in, and you do have one in last week's packet, 1099. So if you want to get last week's out, I think it's the wages. So it should look like this.
Yeah.
And right up. The very, very back, you're going to have Schedule C. The last 2 or 3 pages. This is what you're looking for right here. Okay? So if you look at that, see that big arrow that says Schedule C, and it's pointing to box 7. So one of my first returns I did, I had a gentleman come in, and he had a 1099, and I was going through, and it was just him, super simple, head of household. He had a couple of kiddos. I was going to do the return, and our manager was out to lunch, and so I was there by myself, actually, and it wasn't ringing hardly anything up for a refund. And I'm like, this is really weird. He made enough money. He's showing a profit. He should have a good refund on these kiddos. So I'm looking, and I'm like, I wonder if it has to do with something on the 1099. So I call our owner or the manager, and she calls me back, and she's like, oh, it's not in box 7. His employer had put it in box 3. Well, box 3 is other income. So that's not used as common. And if it's in box 3, it's not going to ring up EIC, which is those bigger credits. We haven't gone over them yet, but a lot of other tax credits you're not eligible for. It's not in box 7. So we don't want to get into the habit of questioning forms, but I do if I see that on a 1099. Okay? So if it's not box 7 on 1099, we might want to be sure we know what they're doing. If they say, oh no, that's my main job, and that's, okay, then it's supposed to be in box 7. Okay? Box 3, for example, is going to be something where maybe you already have a W-2. So maybe you, I know where I've seen it the most is like police departments. Say they do security at like one of the U of A games, and the police department sends them out there, but they're doing a specific job on specific days, and say U of A is going to kind of fund them. Well, either the police department or U of A may give them in a box 3 for an other income. So it wasn't in their regular W-2, but they're still doing the same type of work. Okay? Wasn't their main line of work, right? They weren't policing on their own all year long. They just had those specific jobs. And so that's what was in box 3. So for the most part, it's going to be box 7. Okay? You're going to use Schedule C. So the other class was kind of concerned about the difference when I say forms. Forms is used for any piece of paper. Okay? You may have a tax form that's a W-2, that's the client's. We have tax forms here that we call forms that's inside of the return. Okay, so we interchange that word. So this is the income form, okay? But then we fill this part out, but then it rolls into the actual Schedule C, which is the IRS version, okay? Okay? So if someone brings in a, just kind of in the same wheelhouse, a W-2, well, it rolls to that 1040, right? In that box 1 we talked about, okay? So that's what the IRS really goes off of, is the 1040, right? But that doesn't mean that's not a tax form. It's just this is the form everything gets generated on for the whole form to come up with the total amount for the Schedule C and for self-employment. Okay? That's just their tax form they may bring in with the income. So it's reported on Schedule C, and then all that gets rolled to line 12 of that Schedule 1 we talked about. When we went over it the other day, there was like farming, Schedule C, different other forms that roll into that form. Okay? I know that's kind of confusing. So it comes in on their 1099, rolls to the Schedule C, and then the Schedule C rolls it somewhere else. Okay? So it is kind of a little bit of a path, you know. You don't have to completely have all that memorized. Okay? Like I've told you guys, you're going to have questions when you get to the competency exam, so that's what the notes are for, that's what Google's for. You're not going to remember every single thing. I mean, just in the Schedule C, there's like 40 lines. I don't have it memorized, couldn't tell you. I just know that goes on that page, and that's what's most important, is that you know where it goes. Okay? Let's see. The taxes. So the way the taxes are different, and I think a lot of you guys have talked about how you've either had 1099s before, you know somebody that has. When you're truly self-employed, you don't get to hold taxes really normally. If it's a smaller situation, you probably wouldn't pay in taxes during the year. Okay, the only ones that are doing that is if they probably are more close to the six figures that would do that, or if somebody was making really good on their 1099s, they might look at paying in some during the year on their own, but for the most part, they don't when they come into our office. So this is when it's reconciled. So if somebody comes in with a 1099, we usually know, okay, if they've got kids, they're probably going to get a little bit of EIC. They're going to get a small refund back. If they're single and they had a 1099 job, they may get a little bit back, or if they did really well, they may end up owing, depending on their expenses. So, let's see. About that. Something very important to take note of, okay? It's required to be filed and provided to the individual when payments of $600 or more are paid during the year. So if Sheila does $300 worth of work for me, I don't have to issue her one of these, okay? Because she didn't do 600. She didn't hit that mark. I can still deduct it on my Schedule C as contract labor or cash payments, right? I don't have to technically give her that form until she hits 600, okay? She, on the other hand, if she made 300, if she made 300 from me and 300 from someone else over here, she's got to do her own Schedule C. But she's not going to have any forms. She's just going to record it as getting paid in cash. Okay? So it's two different sets of numbers. Okay? 600 if you're the employer contracting out. If you hit 600 to owe someone, you have to pay them on one of these forms and report that. If you're the actual person working, you have to do a Schedule C, whether you have 1099s or not, at 400. Two very important numbers, but totally different. And I think we were talking about those the other day. And I knew they were different, but I just couldn't come up with them because we not go over them yet. But yeah, so that's the difference. And as you guys start to do some examples, it'll make more sense to you. Next week, I'm hoping next Thursday, we'll all either be in here or at Springdale, I haven't decided yet, to do a really big crunch session and actually do a bunch of applied practice. So we're literally going to take all these first 5 or 6 chapters and we're going to do a bunch of returns and practice and that sort of thing. So, because quizzes are good, they kind of refresh your brain and it's memorization and you're learning, but actually writing things on a 1040 and starting to do it is really good too. So, we will do those next week. But yeah, so that's the Schedule C. There are different things on here. There is payer's tax identification number, recipient's tax identification number, and this is where I was telling him. EIN and Social Security number are both accepted. So I don't know what it might be I-10 is not accepted on that quiz, but usually on a 1099, you would have your payer's tax identification and then the recipient's. You can use their social, okay, for both. They don't have to have an EIN. Usually the only time you have an EIN normally is if you're W-2ing employees. And what's the difference, or why would you do that? Well, one main thing is if you're W-2'd, you're really more setting that person's schedule. So you have to be here at a certain time. I have so many employees. I'm having somebody do my payroll, that sort of thing. Or maybe you're a bigger organization. This is more for smaller businesses, maybe that are just going to have a handful of employees. And so they just like 1099. And when you 1099 somebody, that's kind of the jargon we use. when you issue 1099s, like I said, you don't have to worry about taking out the taxes and all that because they reconcile their own on their taxes. So that's another reason some people like to do it this way versus getting an actual employee identification number and doing the W-2 route. Okay. Let's see. So let's actually look at some more details here. Business records. Let me pull one of these out. I think I may have showed y'all this the other day. And guys, this is just an internal document, so y'all don't really need this. I may have showed you this. But if somebody comes in and they don't have anything, like they literally just have one line written on a sheet of paper, we usually go ahead and have them fill this out a little bit, or we walk them through it. There's all different kinds of oddball questions. Usually we just skip some of them because they're not super pertinent. But there's like, their name, are you a business owner, what type of records do you have at home that you didn't bring with you, different questions of, do you have a business license, do you have anybody you got to issue 1099s to, there's vehicle information, things like that. Then on the back we have mileage information, and then we have all the different types of deductions they can take. Because, yet again, some people, if they're new, or it's a new small business for them, they don't know what they can do or not. They're lost, They just know, this is my balance sheet, this is what I took in, this is what I spent, help me, And so this just helps them be a little more organized if they come in and they're not sure, okay? And there is a place for them to sign it at the bottom. But we do keep those up here on our little table. We don't have to use them too often because most people do have some sort of method they use. It's an honor system with the IRS when you're in business for yourself. So that can be good and that can be bad. If you work in all cash receipts, the IRS has no clue what you're doing. So they're on the honor system too for us to provide, for you as a business to provide that information when you do your taxes. Okay? So business records, they want them to be maintained. Like I said, we either have that. If they have a few things they've brought in for us to go off of, we like to make a copy and put it in our records. If they had hundreds of pages, remember the boxes I was telling you from, I don't even know what we kept on those people. I'd have to go look it up. It's a good question. Usually we'd like them to have a summary page of all those added up or something of that nature that we could just copy. I don't want to go copy 500 receipts. I'm not in the business of doing that. Meals, travels, gifts are also subject to documentation. Yet again, the IRS is not going to come after this for every single return. It would probably be a random audit. Okay? So is it good to maybe see if they could have those things or come up with those things? Yes. Do we need to see every itemized receipt they've ever had? No. Okay? But just be sure that's a give and take. Be sure that it passes the smell test. Because when it comes down to cash receipts and Schedule C's, when I told you guys it's highly audited and it's very fraudulent, is what stops someone. You guys haven't learned a lot about the credits yet, but there are credits you get for your children and for different tax credits. If you can put on a form that you made so much money, what stops someone from just saying, hey, I made $10,000 last year, and then getting some of that money back on those child credits that they can get back on that income? Nothing stops them except us. So that's what's very important on those sorts of things, that we make sure it passes the smell test when they're saying they're doing certain jobs. Can we have them write down people they did work for, names, numbers? Well, yeah. If we think it doesn't pass the smell test, sure. Have somebody write me a note with their name on it, and the IRS will do that as well if they get audited. They would want names, numbers, addresses. Yeah, even if they can't come up with records for their kiddos, if they get audited for kiddos, they will accept letters from family members, church members, community members, business, just different people that might know the families. So that would be something the IRS would make them have anyway. So the more information we can collect, the better. It's just that balance of how much do they bring in versus do we want them walking out, because they could go somewhere else if we kick them out. So we just have to be really careful on that. So this is just some of the things that are going to be on a Schedule C. So you can look at that. There's Schedule C's in the back of that one, and then there's another Schedule C on the front page of today's that's actually already filled out for you, just an example. You're going to have information on a vehicle if you used one for your business to drive and running errands and things like that. Background information, income, cost of goods sold, if you have some sort of inventory. We don't have that as much as far as inventory, expenses, and then at the end it would be a profit and loss. And you guys will see that on your actual Schedule C when you look at it. Okay, so this one's blank, but if you guys can either look at the back of last week or you can look at the front of this week, either way. When you look at the Schedule C, the first line is name of proprietor. Okay, in our software, if someone has a Schedule C, it's going to roll all that in there for you. You don't have to type it. So if you haven't found it, we're looking at the front of this week's or the back of last week's. Okay. You've got your business profession, you've got business name, business address. The right-hand side, you've got social security number, EIN if you have one, and it says enter code from instructions. What kind of code do you think that could be? What kind of code do you think could be on the return? What do you think? What kind of code? Business code. Yeah. So basically, the IRS has is it 6? 1, 2, I think it's 6. So they basically have like a 6-digit random code for every type of profession you can imagine. And so the funniest thing is, what usually takes us the longest when we're doing a new Schedule C is clicking on that and going to the IRS list of codes just to find their professional code. Because we don't have them memorized, the system auto-populates it. So usually there's a link, and we go dig and dig and dig, and if you've got a painter, there's like a list of 100 different types of painting, so we're like, what kind of painting did you do? And so anyway, and that's the only way. It won't even let you type it in. Even if you knew the code, you have to go search it and click it from the link. Could be different this year with new software, but that's what that is. That's found at the IRS website. If you were ever doing something by hand, IRS has the list on their website. So that's going to populate in there. If they have an EIN, that will roll over in the EIN section, or you will type that in. If they don't have one, your social will be up there. That's no big deal. But if they do have one or have applied for one, it needs to be on the return. Business address. So a lot of them might have a storefront, or they might work out of a small office that might not be at their home. So we would do a business address if they need one. Okay? And let's see, accounting method is usually cash. So usually we mark cash. Materially participated, yes, we did materially participate. Honey, did you find that on yours too? They're behind me. I forget you're back there. Yeah. Let's see. Started or acquired the business during this year. You would check yes or no. Did you make any payments that would require you to file a Form 1099? Well, what are we talking about? We're talking about, did you hire anybody that you need to file a form of that nature for? Do you need to give them their 1099 form? Okay? It's yes or no. Now, there's nothing else we do for them as far as that goes inside of the return. We mark, say I was paying Sheila that, say it was up to $600 and I had to issue her a 1099. Well, I would mark, yes, I'm going to pay somebody out. And then I don't do anything else in here except mark it under my wages or my contract labor in the body of the return. What happens is I give her that 1099 and then I send a copy to the IRS and then I keep a copy. Okay? I don't have to enter it in here anywhere. I just account for it in my deductions that I paid that out to her. Okay? So I mark yes. I actually give her the form, and then I put it in with my other wages in the body of the Schedule C. Gross income, you'll see, Part 1. So we've got gross receipts and sales. Okay? So depending on how our software is this year, what normally would happen is we'd have another worksheet attached to the gross receipts and income, so that we could actually enter in our 1099s if we have them. So if someone paid me on this Schedule C to do a job, even though I'm the business owner, let's say I own my own business, but I also do some of the work myself. So I did somebody's lawn. Say I was doing all the McDonald's in Fayetteville. So McDonald's may give me a 1099. So I do have to enter that in for it to roll up into my Schedule C, right? But let's say I was also doing Fiesta Square's. Say I was washing windows in Fiesta Square, right? Kind of a similar maintenance thing. You might could get away with putting those on the same return. Probably not, but we'll just say you could. But they paid me in cash. Okay? Paid me in cash. Would have to be under that threshold, probably, that it's supposed to be for me to not get a 1099. But let's say I did one job for them and they paid me $200. Okay? So I did a bunch of little jobs for different people around town. Okay? I would have that total of cash receipts. That would also have to go in that total. So you could have someone that has cash receipts and has a few 1099s. It's very common. So they all get put into this. So you could have their 1099s that they're claiming as income, and then they could pull out, hey, I got to mail these off to somebody, and I spent this in wages. Well, then we put that down here in the expenses. So if we look under expenses, okay, we've got advertising, commissions and fees, contract labor, insurance, interest, mortgage paid to banks, legal professional services, office expenses, and on down the line. I'll give you all a few minutes to review that while I'm just kind of talking about it. I mean, as you can see, there's tons of different things you can deduct on there, okay? And you can probably see it better on your page. And it does go on, I think, to the next page, too, on some of those. So you've got taxes, licenses, travel, miles, meals, utilities. And then even down here, you've got business use of the home, depending on the situation. The next page, you've got cost of goods. If they have inventory, you have vehicle information, and then you have other expenses. Okay, so basically, other expenses is going to be if you didn't have itemized out up top, if nothing you wanted to put in there fit any of the sections up top, you could put them down here. So sometimes I'll have some businesses, a lot that they'll put in other expenses will be like postal, if they're mailing things, they like to do postal down there. They like to do cell phone bill down there, internet. They like to do gifts. So if they give gifts to their employees, or if they're doing open houses and they give out gifts or prizes, they'll put that at the bottom and earmark it with the name. So, because they want to be specific so they can go back and make sure they got it in that section. Because if you notice up in that expense section, they're pretty specific. So they don't want to miss anything. So that's how we'll do it. If it doesn't have an exact section to go in, we'll do it itemized down at the bottom. And this year, I do know on the new software, some of those sections like advertisement, there can be a lot of things that fit under that. Printing flyers, doing business cards, having something on your truck. So on our software this year, there's actually going to be a little tool that you can itemize it out right inside of that spot off of that deduction. You won't even have to go to the bottom here. So you could even add it up, type it in, it'll add it up, and then it'll save it also. So you can see it later. So pretty little cool thing. And I think there was some more details actually that they're going to also talk about. So we'll see if I missed anything. We've got the principal profession, the business code, the EIN, the accounting method. Let's see, gross sales, we talked about that. We talked about 1099. Do not include sales tax. Those go somewhere else. They will not be on the Schedule C. Let's see. Your expenses do need to be ordinary and regular, okay? You don't want to include anything on there that's personal, obviously. If I'm buying snacks for the office, I can't go also buy a whole bunch of stuff for the house and just say, oh, it was all for the office. Okay, it's got to be legitimate. I think the only things that's kind of one of those things that will come up would be a home daycare is a little more tedious. You do get a little bit more of a deduction in certain areas on home daycares. If anybody like that come in that had something like that, I'd probably have a first-year person roll that to one of us that's been here a little longer. But most of the simple ones that come in here, they're pretty organized. It'll just be on a sheet. You'll know where to put it in. It's not too big of a deal. Car and truck expenses is a little more. It is something we get a lot of. How am I doing on my time, honey? What time is it?
It's 28 after.
Okay, I might be about to run out of stuff. I don't know, so we'll go about 5 more minutes. Car and truck expenses, okay? You can do standard mileage rate or actual expenses. So what that means is every year they come up with a standard mileage rate, and you can write this down anywhere in your notes that you'd like to. For 2018, it was 54.5 cents. So 2018 was 54.5. That just means if you drove 5,000 business miles, they're going to give you 54.5 cents per mile. Okay? So mileage is always better, gets you more for your buck than actual expenses. And a lot of times why people come in here, they have everything written out. I got new tires, I got this. And I'm just like, okay, well, let me show you comparatively what it will do if we just break down some miles for you. And it does a lot better. The IRS does let you recreate. I mean, we definitely can recreate, especially if it's somebody that has a regular schedule and they go to job sites, or like real estate agents go to so many places a day. If they can recreate their schedule, we can definitely help them with a recreation to get the miles. And it's always a better rate for them to do that. So that is something we do quite a bit. If they have the actual amount, of gasoline they bought and they have other gas receipts, well, we could go back and even figure, how much they drove, how many miles by, the type of vehicle with the miles per gallon, that type of thing, and could figure that out.
Like in our case, Michael uses my car and his
Right,
car.
and you can
for
put
work.
2 cars, yeah.
Okay.
Yeah, you can do 2 cars. I know sometimes people just combine them and put them on the one. I've done that before just because it's simpler, but you can do up to 2 per business. So, and the other thing with the mileage is it's also a percentage. So they take the deduction, but then you also have to do a percentage. So most people don't drive their business car 100% of the time for just business, unless they're like a painter, or maybe like a farmer, or that has like a farm truck, or like a lawn person that carries their trailer with it. Usually that could even be pulled by their regular truck, right? So we have to know kind of what, how many miles did you drive for work versus how many just for your regular commuting. And then we do the percentage of it, and the system does all that for us. But just know that you can't put in your pleasure miles with it, okay?
We don't have to worry about depreciation or nothing like that.
No. Now, it will ask you the price, usually like specifics about the vehicle, just for the software. It'll want the make and model and things like that. It will depreciate, but normally the system takes the mileage over the depreciation because it's just a better deduction.